Hey everyone, welcome back to Corporate Decoder, the place where we break down the real story behind the corporate jargon. And today we've got a filing that is less about exciting growth and more about dodging a serious bullet. Get ready, because we're diving into a report from Vivakor Incorporated that is all about a close call with Nasdaq delisting and some interesting share activity that might raise an eyebrow or two. And before we get into the nitty-gritty, if you love getting insider looks at how companies operate and make their financial decisions, make sure you hit that subscribe button. Also, join our growing community on Discord. The link is in the description below to keep the conversation going. So here we are looking at a filing from Vivakor Incorporated. It is a recent report that popped up and it has some pretty eye-opening details about their dealings with Nasdaq, the big stock exchange. This isn't your typical quarterly report showing booming sales. Instead, this is an 8K filing, which usually means something pretty significant has happened that the company needs to tell investors about right away. And in this case, it's all about a warning from Nasdaq. Basically, Vivakor got a letter from Nasdaq saying they might be in trouble with their stock listing. This happened on the 11th of December 2025, according to their report. Nasdaq's concern is all about how Vivakor issued a bunch of new shares and warrants back in October of 2025. The big issue here is something called the shareholder approval rule. Nasdaq has rules that say if a company is going to issue a lot of new shares, specifically more than 20% of what they already have outstanding, and they're selling them for less than a certain minimum price, they need to get their shareholders to agree to it beforehand. This is to protect existing shareholders from their ownership getting diluted too much too quickly, especially when the shares are sold at a discount. Vivakor apparently did two big share offerings in October, one on the 24th of October and another on the 30th of October. In the first one, they issued over 10 million shares and some warrants. Then, just a few days later, they did another similar offering, issuing over 10 million more shares and more warrants. Nasdaq looked at these two offerings together and said, "Whoa, this is way more than 20% of your shares and you sold them at a discount." So they told Vivakor they broke the rule because they didn't get shareholder approval. Now, the good news for Vivakor is that this notice doesn't mean their stock is immediately kicked off Nasdaq. They have some time, specifically 45 days, to come up with a plan to fix this. If Nasdaq likes their plan, they can get an extension to sort things out for up to 180 days. Vivakor says they plan to submit this plan. And they're also looking to get shareholder approval for those past share issuances. But they are being honest and saying there is no guarantee they'll get this sorted out or that they'll be able to keep meeting all of Nasdaq's rules in the future. That's a pretty big risk hanging over the company. Then we move on to something else interesting in this filing under item 3.02, which deals with sales of stock that weren't officially registered with the government. Back in June of 2025, Vivakor had issued some convertible promissory notes. Think of these like loans that can be turned into stock later. They raised over $5.1 million from 7 investors, though they only received about $4.35 million after taking out some fees. Now, here is where it gets really interesting. Between the 10th of December and the 15th of December 2025, just very recently before this report was filed, a bunch of these note holders decided to convert their debt into stock. They converted over $500,000 worth of these notes into a whopping 15.4 million shares of Vivakor's common stock. And what is particularly noteworthy here is that these shares were issued pretty much freely without the usual restrictions that come with unregistered stock sales. The company got a legal opinion that allowed them to do this. They're saying these sales are exempt from registration because the investors were accredited, meaning they met certain income or net worth requirements and apparently understood the company's business well. So let's put on our Warren Buffett hat and look at this. Vivakor is in a tight spot with Nasdaq. They've got a rule violation that could jeopardize their stock listing, which is pretty serious. This means investors might be wary, and it could make it harder for the company to raise money in the future. On top of that, they've been issuing a lot of stock. While issuing stock can be a way to raise capital, doing it in ways that trigger Nasdaq's shareholder approval rules, and doing it through unregistered sales convertible from debt, suggests they might be under pressure to get cash. Converting debt to stock can be a sign that the company isn't able to pay back the debt in cash, or perhaps it is a more favorable option for them compared to taking on more loans or equity at potentially unfavorable terms. The fact that they issued over 15 million shares from over $500,000 in debt conversion is a significant dilution event for existing shareholders, and it happened very quickly. This is a lot of new stock hitting the market without the usual safeguards in place that come with a public offering. The company's direction seems to be focused on staying listed on Nasdaq and managing its capital structure. The strength here is that they are acknowledging the Nasdaq issue and are trying to address it, and they are relying on legal opinions to conduct their share issuances. However, the weaknesses are apparent. The risk of delisting is a huge concern, and the heavy issuance of shares, even if legally executed, could drastically dilute the value of existing shares. There is an opportunity for the company if they can successfully navigate these Nasdaq issues and get shareholder approval, but the risk profile is elevated. In conclusion, Vivakor Incorporated is in a precarious position. They are dealing with regulatory scrutiny from Nasdaq and executing significant share issuances that could impact existing shareholders. Investors should be cautious and closely watch how the company addresses the Nasdaq compliance plan and the ongoing share activity. Alright, that is our breakdown of Vivakor's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching. See you next time.